Please take your seats. The program is about to begin. Please take your seats. The program is about to begin. Please welcome to the stage Bloomberg's Katie Greifeld.
Is this thing on? All right. Hello, good morning, and welcome to Bloomberg Invest, where we unite leaders in asset management, banking, wealth, and private markets for 2 days of conversations on the most compelling risks and opportunities across asset classes, economies, and markets. I'll be hosting here on the innovation stage, and the conversations you're going to be hearing on this stage in particular are going to be centered on transformations and advancements in tech that are happening across finance today. Naturally, that means you're going to be hearing a lot about AI, and in particular, we're going to examine the right mix of humans and machines in portfolio management and investment strategies. Those conversations are going to include executives from Freestone Grove, Two Sigma, as well as the CEO of Man Group, Robin Gru. Now, we do have some housekeeping to take care of. I want to take a moment to acknowledge our sponsor, Invesco QQQ, who is supporting this innovation stage programming this year. And we do have some announcements if you're looking for the Wi-Fi. All the information you need should be on your badges, as well as the screens here. You can see the Wi-Fi network is convened. We will be flashing a QR screen as well, so you can use that to submit questions and live polling during today's events. And you can follow today's coverage and engage in the conversation on all your major social media platforms. The hashtag is Bloomberg Invest. You can find that at Bloomberg Live handle on X, that is known as Twitter, LinkedIn, and Instagram. If you have a Bloomberg terminal, which I hope you do, you can look for today's conversations using the function Live Go. Now, we also have an event app. You can use this QR code as well to download the Bizaboo app. I hope that I'm saying that right. You can access all of our virtual networking community, chat with fellow attendees, build your agenda for the day, and more. And you can also turn on your push notifications if you're so inclined to get reminders throughout the day. All right, I think we're done. So let's get started with today's first conversation. Please join me in welcoming to the stage Freestone Grove Partners Head of Quantitative Strategy, Daniel Morillo, as well as Two Sigma's Head of Strategic Data Science for Investment Management, Claudia Perlich. All right. Thank you both for being here. The conversation that we're having today is about AI, which obviously has exploded onto the scene over the past 2 years, but you two probably know better than most that AI in some form has been around for decades, and machine learning in other forms. So I guess to kick off this conversation, really set the scene, is AI just a rebranding of something that has existed and that we've been using for years now?
You want to start, or should I start? All right. I'll start. First, actually, thank you, Bloomberg, Katie, for hosting us. Very much enjoy sharing the stage with you. I guess I would say that it is new, but I would think of it as an evolution of what we've done before, right? So if you go back to the sort of stuff that Todd and I have been doing at Freestone Grove in all of our previous roles, the quantitative process has always been a huge part of it. And so if you go back 20 years, that was early regression stuff. Later, you think about machine learning things. Later, you think about, neural networks, sentiment analysis. And so we do think of this as an evolution of that, right? It's not like we're running around thinking, oh, this is like a brand new thing, we don't know what to do with it. But it is a new capability, particularly as it relates with text sort of data, right? And so we're pretty comfortable with it because it's something that we've seen happen in other parts of the business. But it does bring additional capabilities that we wouldn't have had before. Yeah.
Yeah, I think I very much agree with you in kind of your overall framing. It really depends how narrowly you look at AI, whether you include the kind of broad predictive machine learning in that category. And then it has really been trusted and true for a very long time and component of all types of systematic investment strategies. But I like your nuance around language really being a differentiator, maybe video as well, where the new capabilities do feel more like a kind of slow progression of advancements. It's more of a jump. Not quite sure yet whether get the right direction fully, but machine learning is very comfortable with numbers, and text is a bit used to be unwieldy when it came to seamlessly integrate in the otherwise more numeric world of finance. And I think having gotten over that hurdle really opens up new opportunities, but also challenges that we're still trying to figure out.
Well, to build on that, I'm curious, I mean, in your current roles where you are right now, strategic data science, quantitative investing, how much is AI in any form already a part of your life and your day-to-day?
I think that depends, again, how you feel about the definition. I walked into my first course on artificial intelligence in '95, when it was a really obscure hobby of some computer scientists. And I've always been in love with working with data through technology, so I didn't have to talk to people and you could still learn something about the world. But in that sense, I've always felt a little awkward calling it intelligence. I just loved looking at it as learning from data, and it has been my steady career companion throughout the years. It is a bit of a quantitative shift, what we're having now, because we can talk to it, and it talks back in a way. That's why it feels different, but it has been my steady partner for a very long time.
Yeah, I guess we'd like to make a distinction between the part of the tooling that is helpful for automation versus the part of the tooling that you think might be helpful for, I'm going to call it making judgments, right? I think one thing that is important to remember is that the current stage of what we think of AI and the transformer-based technology, right? It is trained on millions of documents, tens of millions of documents, and the training is designed to produce essentially a probabilistic forecast for what is the next word or the next sentence. And I could use the word token, right? But it's essentially, in finance, I guess for many of you here in this room, you would think of this as it gives you the consensus, right? Mm-hmm. So if you put a prompt in ChatGPT, what you get back is essentially some average of what a typical person might say, right? Because that's how it's been trained, right? So from our point of view, when you think about alpha generation, you don't make money off of the consensus, right? You make money off of differences. That's kind of the job, right? And a lot of how AI is delivered now is essentially not constructed to do that, right? And so we've been significantly more focused in it helping the investment process with automation, summarization, potentially thinking about understanding themes with a lot of the data that we get now, not as much on the sort of actually making judgments on the investment side. We just don't think it's at that stage at this point.
Well, to that point that AI is trained to give you the consensus, you don't make money off of the consensus unless you're long in video over the past 18 months. But to that point, where is the most opportunity for AI? Is it for alpha generation maybe down the line, or is it more from the productivity gains that you could get from using an LLM, for example?
So I really love the notion of thinking about it as predicting consensus. But I would argue that's not that untrue from other predictive models, even linear regression as well, right? And then consensus for who? To your question about alpha, sure, if I just ask an LLM, hey, what do you think, where's the economy in Germany going these days? Yep, I'm going to get a consensus. But if you start to be much more nuanced about it and say, okay, considering, I don't know, the recent political upheavals in France and the election results for Europe and, I don't know, the flooding or whatever else you want to consider, right? But then it becomes this augmentation of me working with an AI because I'm putting all the things on the table that it needs to consider, and now it's answering a question that nobody has ever asked, which is a problem too, because this is where they get really good at hallucinations, and this is where governing really becomes very difficult. So I personally have found it in the systematic space to be really good at injecting text-based information as another form of looking into the world, into an established, very well tested and constrained apparatus that then can make forecasts for alpha, and so sometimes being able to integrate text into that other existing context of what the world in finance is doing already. I think there's a lot of value there, but we're moving slowly knowing that one needs to be careful around those.
Yeah, I think the thing that is a little bit different in our context is Freestone Growth, the way we founded it, is intended to be an integration of the quantitative side and the fundamental side, right? And so unlike a, quote, pure quantitative firm, we have long history of thinking about how do you deal with the tax data with humans, right? That's what a fundamental analyst does. And so in that context, we're more interested in how do you use that technology as a mechanism to make you more effective in dealing with all that text and data that you read, right? For a fundamental analyst, a huge chunk of the job is literally reading all day, right? There's all your sell-side reports and the conferences and the transcripts and the models. And so insofar as you can get additional productivity from having the tooling help you direct attention, sort of make you more effective in thinking about what it is that you want to spend your time, we find that a useful sort of early use case. We have tended to find that if you want to substitute the actual judgment generation for it, you at least currently don't get particularly good results.
And so, I mean, just to crystallize some of what we're talking about, Claudia, correct me if I'm wrong, but it sounds like you're saying that, I mean, it is possible to sort of generate alpha, to maybe make money if you really tailor what you're asking the AI, that it depends on what you put into it.
So my example was more about it having, it really matters how you combine it with other information rather than just asking a somewhat naive question. But again, I'm in the systematic space, so I'm not usually asking ChatGPT about its opinions. And then it becomes really more of a way that I can inject easily analyst reports into something that is already using traditional statistical machine learning, because now it's easy to put the text on the same footing as everything else. But to your point, and I really value that part, I stumbled into finance about 5 years ago. My background's in computer science. And so I like having ChatGPT being a comrade in arms to understand some financial nuances. So it's almost like my personal tutor, or when I want to understand what does the analyst actually mean when he talks this way about a company, to help my ideation as I'm thinking about what kind of data to include for differentiated models that can have a competitive edge.
Well, how reliable is AI? And I like that framing, that it's a comrade in arms. You can use it as a tutor. You can ask questions of, LLMs such as ChatGPT. But can you really trust what it's spitting out at this point, or do you have to go through, clean it, fact-check it before you actually use it for something?
So I think there is the systematic answer to that. How do you backtest something for the last, 7 years, which is standard, when it only has been around for, 2.5-ish. So we do not trust it per se. And we are working very hard on figuring out how to think about backtesting. But it depends on the question. If all I need it to tell me what the zip code of an address was, which used to be a huge problem, but now I can easily pull those out, merge it on that with other data, I'm not that worried about it getting zip codes wrong. It's just really good at that stuff. So I think that's the nuance. Are you asking a common question that it probably knows how to handle well, or are you hunting that unicorn where I really wouldn't trust it whatsoever?
Well, turn that question to you. Do you trust AI at this point?
Yeah, same answer. It depends on the application, right? I think in general, you could do pretty good testing on things that essentially boil down to automation, where it's less about whether you're trusted or not. It's just that you have the tools to do the testing, right? And so you're looking to automate some particular model on the back end, back office stuff. I'm going to call it mundane sorts of things. I don't have to trust it. I can just test it, right? Once you're thinking about an application that is either sort of a tool as part of the actual investment process on the judgment side of things, it's not even obvious what exactly you want to test in many cases. I sometimes use this example of thinking about where insight comes from in the first place, right? So if you think about what a good fundamental analyst does, or did, for many years, not just now, that reading of all the documentation, looking at the text, understanding what the market looks like, economic conditions, what subtle thing is the person picking up that then leads to an idea that becomes a differentiated bet? It's not obvious how exactly that happens, right? And so it's hard to then ask the question, is this machine reproducing that process, right? So I sometimes use the example of taking notes. It's been now a while. It's one of the early use cases of AI where you could take a transcript of every meeting you have. You can have ChatGPT summarize it. And yet most people don't do this because most people have figured out that if you do that, you kind of give up your ability to actually learn from what's happening. Most people take notes mostly as a mechanism to better remember what was happening, to sort of prompt themselves for new insight. And if you suddenly kill that, it's not obvious where exactly the insight is coming from, right? And so part of our problem is that what question to ask about, is this thing actually reproducing my insight, is actually a hard question to ask in the first place, right? And so we're not, I don't think we're anywhere near there.
And I think that the conversation that we're having right now ties really nicely into the actual name of this conversation, which is the right mix of humans and machines. So I'll ask you just straight that. I mean, what do you think the right mix right now is when it comes to using AI versus having that discretion over what you're using, and where do you think that could go?
To not give another kind of, it depends on the application kind of answer.
In your application, how you use it?
I find it augmentative to my mind and actually help me understand processes by just having a partner to talk to in some ways. But that's probably not where most people who are sitting in this audience kind of come from. I do value it as a tool to automate some kind of trusted, easy processes that I know how to control. I like it to amplify or scale myself when there's a kind of the amusing word in computer science circles is AI allows professors to code again, because if you don't every day have 4 hours to really deep dive into code, it's something that gets rusty, and I found some of the coding capabilities to be useful, to just give myself the opportunity to do something that I miss doing in the kind of higher roles that I've taken. So in those terms, and then as a technical tool, I love seeing how algorithms evolve in finding signals that I haven't been able earlier to detect, with the caveat that we are still working very hard on gaining the confidence to do so. Maybe you asked me about how to use it.
Yeah.
Let's for a moment not talk about finance. I love the example that computer scientists have been working for ages making AI look at images of fMRI to detect cancer. Turns out doctors don't care about AI taking over the one fun part of the job, because that's what they're actually good at and like to do, looking at images, coming up with diagnosis. What they don't like to do is write reports about this after. So by reframing the application to one that addresses something that we find somewhat tedious and maybe not as good at, and focusing on those. So I think the human component is very often about framing the problem. Even in finance, you can look at companies many different ways. How you deploy your AI, how you frame the problem in the first place. This is where our intuition and really value comes in.
And it's a nice reminder, too, that we're taking this through the narrow lens of finance, but you think about the totality of the potential of AI, and it has much broader applications. But to re-zoom in and bring that question to you. I mean, very curious to hear your thoughts as to what the right mix is when it comes to your role.
Claudia didn't want to do the it depends, so I will do the it depends. I think it depends a lot. We actually had this conversation prior to this on the coding side, right? So even for a particular potential application, in this case coding, I think there's a very big difference between, hey, I'm a little rusty, I'm not as hands-on anymore, the tool will help me, most definitely, right? If you ask engineers who are doing code all day, every day, we've actually done a bunch of experimentation on this. What you find is that the tools will generate a bunch of code, and then they find themselves spending just as much time double-checking the code, such that, in fact, there is no benefit, right? At least on a timing sense. And so even on a narrow case, it very much depends on, okay, code for whom? You know, a researcher who occasionally does code, or code for an engineer that is doing that all day, every day. Mm-hmm. And I suspect that that will repeat itself in lots of places where high expertise roles will take much longer for that to sort of replace itself with components of you know, whatever the next generation of AI looks like. In lower expertise roles where AI can do something that you sort of do on the side or is not the main focus, writing reports as a doctor, I suspect that will happen pretty fast. And we're starting to see that already for what I would describe as the sort of more mundane kind of things that are happening in the background, right?
And I feel like in asking what the right mix of humans and AI is, we're kind of dancing around the real question that I think a lot of people have, which is, am I going to lose my job to this? Could the right mix one day just be 100% machine or 99% machine and 1% human? When you look far into the future and you think about the asset management industry in particular, I mean, could that be a reality one day?
I don't believe in 100%. I truly don't believe that AI will take over the world or threaten it. There is a component, and I think you've touched on this very often. It's about the judgment. Is it doing the right thing? And that's the piece we really have the least of a handle on, and I don't think we will ever fully have it. Studies have shown that AI is really terrible at acknowledging its own insecurities. How very human. But the point is you have very little feedback on how certain the system is about something. It will tell you a totally made-up story and be absolutely certain. As long as that's the case, and the big thinker in the AI space seem to believe that hallucinations are here to stay and nobody really knows how to fully get rid of them. As long as that's the case, and I can't judge the reliance, human judgment will be the ultimate gatekeeper for pretty much everything that matters. And I wish to believe that what we do matters.
Okay, so Claudia doesn't believe in 100%, which is very reassuring. Daniel, what do you believe?
I also don't believe in the 100%. I guess I'd just say, however, that you could get close to it depending on the circumstances, right? So will there be job loss in the back of that? Most definitely, right? And we've gone through this before, right? We used to have, you know, horse and buggy drivers and, you know, switchboard operators and data entry people. We don't have them anymore, right? I think that will continue to happen, right? And you see it already, right? I live in San Francisco. I take Waymo everywhere. There's nobody driving, right? It works pretty well. And I think that will continue to happen. I think the real question is, with those free resources, I think previous generations of technology advance seem to suggest that does get recycled into new ways of thinking about what the economy looks like, right? And so I do think people will lose their jobs, but I think humans will retain the ability to drive innovation on the judgment side. So I also don't buy the 100% thing.
And I feel like sometimes to sort of gut check myself when we have these doom and gloom conversations about AI, I go back and watch what people were saying about the internet like 30 years ago, and it's pretty shocking. So good perspective there. And now that we've got the doom and gloom question out of the way, I mean, in the last 5 minutes we have together, I'm curious, what excites you the most when you look 5, 10 years in the future and you think about how this could be disruptive in a good way? I mean, where do you see the most opportunity right now? I don't know who wants to start.
So maybe this is not the 5-year plan, but I have been trying to convince people that machine learning is a great thing. I remember being on an IBM stage 15 years ago saying, hey, data is the new thing, and that was like, we have been preaching that choir for a really, really long time. And my observation has been that what we currently see is AI, like LLMs and co and chatbots. It has raised the level of awareness of the potential, and now I see a lot of more traditional machine learning, predictive modeling, optimization sneak into so many industries that so far have been kind of careful to adopt, whether this is agriculture, education, or allocation of resources. So for me, the excitement is actually maybe less about what LLMs are going to do tomorrow. It's the fact that we've finally gotten over the hurdle to recognize maybe the last gen algorithms. And I think this is where investment really needs to pay attention, like what industries are finally getting to the point where we are seeing the older brothers coming to the forefront and really changing the way things are done.
So, I mean, to tie it back to the first question, it sounds like maybe this was a good rebrand then, made it more accessible to a broader audience than maybe machine learning was 20, 30 years ago.
I just hope that we don't mess it up again with inflated expectations. I mean, we had a couple of AI winters. Many people may not remember this, but I hope we don't walk away because right now we are being told, oh, it will kind of rule everything, saying, well, it has its limitations. I think as long as we're clear-eyed about that, we can really take advantage of the momentum that we currently have.
Yeah, I guess I have a flavor of that in mind when I think about what's exciting about it, and that is that I think it's resulted, so far at least, we shall see, in a willingness from people that I suspect 5 years ago would have been not all that keen in learning about quant and teaching themselves whatever the tools are necessary to do good quant work, to actually get involved into something that actually has the flavor of doing systematic analytical work, right? We've hired interns over our careers many times, and the quant guy trying to convince the intern that they should think about taking more math classes and doing more matrix algebra. I'm generally not successful, right?
Yeah.
But I have found more recently that if you substitute some of that by the idea that some of these new tools don't seem as hard, at least as an entry point, right? They can get just as complicated, to be clear, but at least the entry point seems easier. And we've seen a pretty interesting increase in interest in doing systematic work on the back of all of this AI stuff. And I'm actually quite excited about it because I think that's sort of where the fun is at, right? Thinking about how do you think about in a disciplined, systematic way about all these things.
So it sounds like what you're saying, the interns are psyched to get involved in AI in some
Certainly they're more psyched about that than they are about matrix algebra.
That makes a lot of sense. And, I mean, it just feels like when we talk about AI, it's basically used in a synonymous way with chatbots right now. And again, that's how really the broader public interacts with AI. Certainly that's my biggest interface into AI. But should we be expanding our aperture here? Should we be thinking beyond chatbots when you think about actual applications into finance?
Definitely, I think the current ongoing multimodal world, and I think it's less, maybe you correct me in that, I think the generative part of AI is probably less relevant to finance. It's really much more about bringing information from images or photographs or text in any language you choose together on the same table as you're trying to get a 360 view on what's going on, either very narrowly with this particular company right now or more broadly about the economy. So it's actually this in-between math stage where everything is just a big equation with billions of parameters. That's the fun for me. I don't care what comes out on the other end and the next word it's going to tell me, right? This is secondary for it. Getting people to get excited about that is hard. But that's kind of my take on where the finance is. It's not about what it says back. It's about what representation it can find that can include different languages and video or whatever else that then I can plug into a better way of understanding the world.
Yeah, I guess So when you asked the question, I guess I hadn't been thinking of the chat piece at all during this conversation.
Well, that's good.
So the question took me a bit by surprise. No, I think of it as a modeling tool, right? So you have a giant amount of data that is unstructured. The ability to think about modeling its features in various ways is, to me, what's exciting. The fact that I can, quote, ask a question, I don't really care all that much. So whether you think about measuring things that otherwise are very fuzzy, right? What is the sentiment of this particular bit of text, right? How do I think about emerging themes? Can I detect emerging themes that people are talking about in text that I read? Can I think about measuring things like conviction levels or measuring potentially the ability to tell that somebody might be lying in a bit of text, right? These kinds of questions to me are significantly more interesting than kind of respond to a question, right? And of course it comes together, right? It's the same technology that allows you to do the responding of a question thing, but I frankly don't think that's the interesting part of it at all.
Well, I see 20 seconds on the clock, so I'm going to make the executive decision to say this was a great conversation. Really appreciate you guys taking the time. Our thanks, of course, to Claudia and Daniel. And we are just getting started here, so thank you both.
Thank you.
It's tech, it's talent, it's vision.
Please welcome to the stage Robin Gru, CEO of Man Group, with Bloomberg's Romain Bostick.
That was some pretty dramatic music
I know.
in the video there. I'm surprised they didn't have like baby photos of you, a whole montage of your entire life or something.
I'd have had to have words with my wife about that.
Well, we're here to kind of talk about the intersection of technology and finance, and there probably hasn't been any moment in our history, in our financial history, where that intersection has been as important as it is now. And of course, Man Group, at least you guys like to boast that you are kind of ahead of everybody on this, kind of the original, I don't know. What,
The OG?
the OG.
That's how we're going to play it from now on. This is the morning thing, the OG of AI. Okay, fair enough.
We'll talk about the evolution of that, though. I mean, a lot of people know Man Group for its quant trading strategies, the systemic strategies, a lot of the programmatic trading. But the evolution of that technology, the evolution of AI, has now sort of infiltrated, for lack of a better word, almost every aspect of what you do.
It has. I think we're talking about AI as a brand new thing. Mm-hmm. I think there's a bid offer in my firm, at least, that it's been around for and being used at Man Group for 10 to 15 years. It depends who's arguing with me at the time, which one I believe. But tech is so much part of the DNA of the organization. It's not just this AI thing that's a brand new thing that suddenly we're all grabbing hold of. We're a quant firm that's been in this space for 35 years. The heritage is deep, and we have used technology throughout the organization. It's part of our DNA, which is an odd thing to say. So it's within it's about how you create an operating platform. It's about how you tool up your ops area. We doubled our AUM since 2016. We've not increased our headcount in ops. That's because we have tech. If you are a print of 7 trillion in the market, 21 million trades that you're managing every single year, you need technology. So that isn't just about AI, it's about tech in every part and every aspect of what you do.
You have that in portfolio management, you have that in trading, you have that in a lot of predictive models as well, correct?
Correct.
Do you think your peers are as ingrained, particularly on the portfolio side, in the integration of technology and AI into portfolio management?
I think the reality is that some of this tech is becoming table stakes for every one of us. And that's when I talk and sit around a table with other CEOs, we talk about the tech that we all have, the bit that enables us to be smarter, more efficient, less error prone, where we take friction out of our organizations. It's a very hard thing to find alpha if you're an active manager. It just is. What you don't want to do is then give that alpha away through your own inefficiency or friction in your own organizations. So do I think that other firms are using this? Yes. Do I think that we are good at this? Yes, I do. You know, I say that half the firm is made up of quants and tech people, developers, data scientists. That makes me
What
feel...
are they like in real life?
What are they like in real life? They're great. I mean, remarkably, they're the most diverse group of people you can get. There's this sense that, and we talk about this a little bit, I have a big discretionary investment team as well. And in the old days, I used to talk about people being, the people who used to sit at the front of the class and the people who used to sit at the back of the class. There's a bit of that, but the reality is there's difference across the entirety of Man Group. We have this program called Minds at Man, which we started actually through COVID, which was about getting people to talk about what they do outside of Man Group. I can't tell you the ability for people to be talking about how they've won national championships in aeroplane model design and blah, all the way through to they're the best wine tasters in the world versus how quickly you can do a Rubik's Cube. I could do none of those things.
Okay.
But
Do you have a talent?
Very few talents. I tried karaoke for the first time last week. That's not my talent either. There you go, though.
Yeah. Well, but part of your talent, though, is kind of bringing all this together. I mean, your background in risk compliance, I would assume would have some transfer to what you're doing today, or did this kind of just completely hit you out of the blue?
I think what I benefited from has been a career where I have found myself navigating different challenges that the market's thrown up, that organizations have thrown up. That's quite a privilege, actually. But I sit across the table sometimes from people who haven't seen a credit crisis. I have. Who haven't seen market dislocations quite badly. Well, I have. Or haven't seen a version of how Russia has already devalued once or twice before. So my experience through navigating those things have been incredibly valuable. I think the other piece is I have run large chunks of Man Group, be it trading or be it ESG or be it our solutions business. And that evolution has been very, very useful. So I have the benefit of seeing the organization and financial services through many different lenses, and that stood me in very good stead.
You talk a lot about how the technology has increased productivity.
Yes.
When we talk about the new applications of AI, and I'm not just talking about the front-facing chatbots that we all know about, but really kind of the stuff that's really deep into the background, how additive is that to your bottom line?
So AI is exciting, and it's an efficiency. When I talk about how we use technology, artificial intelligence, any sort of NLP, large language models, it can move through what it is to be more efficient in data research, in how we execute transactions or trades more generally. It is how we put transactions and how we put content together. It's around predictive models, be it in financial predictions or in ESG. It's any number of these pieces of the puzzle. It's about the fact that we have sentiment analysis, that we're able to deploy technology in a way that enables our discretionary traders to operate more efficiently and effectively in their thesis, or in quant as we go out to more markets, more data sources, to be able to see whether we can find more alpha, which is ultimately for the benefit of our clients.
I don't want to alarm you, but they just put your 5-year stock.
Yeah, I just saw that.
You, so just look away. It's not bad over 5 years.
It's not too bad.
When we talk about sort of what the next 5 years or 10 years are under the leadership of Robin Gru, how much further can you deploy this technology in AI? I mean, I know it's there, but what's the next evolution of it?
I think, you're right. This evolution of technology is just the next one. There'll be a one after this and the one after that. And we'll be, I think, adopters of those things within reason and within risk measure to make us smarter. But what we're really after is ensuring that we continue to grow content and that we have relevance to allocators, to our clients. This is a space where clients are looking for more from fewer managers. They're looking for greater content. They're looking for more customized solutions. When you look at Man's AUM today, 2/3 of our AUM is now in some form of customization. When you look at the clients that we have, the top 25% of our clients are in 4 or more of our strategies. That's because clients want more customized solutions to the real challenges they're facing. These markets are difficult to navigate. The world in which we're operating is tumultuous. It is tricky. And so when you are sitting down with clients, when you're working with them, you want to be answering the questions they have, the challenges they have, working through those challenges with them. And so for me, it's about growing content and capability. It's about growing and being sure that we are still relevant and that we're at the table with clients as their partners to navigate these market cycles, cycles that we haven't seen as dramatically for the prior 10 years where we had a much more passive environment where cash was free.
Well, I mean, you think about the cycle we're in now, which some people would say is relatively unprecedented, certainly in the modern era. I mean, how do you, when you talk about AI and the use of data and other things that go into that, you're looking backwards, right? You're taking past events and trying to correlate them to, at least for what today seems almost unprecedented. How do you square that circle?
Well, you're not just doing that. So you're also looking for new sources, new data streams. You're looking for the ability to, as I said, look at NLP, look at sentiment analysis, look at the ability for my discretionary investors to be able to look at much broader swathes of information, to be much smarter about their investment thesis. So it isn't just a backward look at market behaviors, although that's always interesting to do, especially if you're running trend momentum strategies. But it's also about deploying technology to be just better at what you do and better at finding sources of investment capability, and then being able to test them in an uncorrelated way. You know, more data doesn't mean uncorrelated. You want orthogonal content. You want content that is able to perform through different market cycles. So it's not just about a backward look for predictive modeling. It's about using technology and using AI capability to find new, different, uncorrelated sources of investment that you can deploy at scale and in a way that can be customized so that your clients are getting answers to the challenges they're facing. You know, Romain, we're not in a position where people have a blank piece of paper. We're not at school in that sense. You know, we're not, what is your ideal portfolio today? Let's start with $100 and invest that. That isn't where we're at. We're at a place where allocators already have portfolios. And now they're trying to think about, do those portfolios do the best they can do in the environments that we are navigating? Are they really going to protect them in a recession, disinflation, deflation? What does it mean globally? Is the US away? How is their portfolio invested internationally? What does that mean? How much exposure have they got in private equity, which means they don't have the liquidity? What's their liquidity profile? What's their duration risk? How do we manage maturity? We don't start at a blank piece of paper. And that's, I think, why customization is more and more important, because you're on a journey with allocators to help them rebalance and to rethink their portfolio through time and to be responsive to market cycles. So technology, let me circle us back round. Technology and AI is part of us being better at what we're doing. What you're not hearing me saying is that AI is suddenly going to make investment decisions. What I'm saying is it's going to make us better and smarter at all of the underlying capability. We will deploy technology to make us better at what we do rather than to replace what we do.
So less a replacement, more of a tool.
Correct.
For your managers. Do they understand that?
Yes. And when you have half the firm that are technologists, developers and quants, why do I sit a little bit easier on this chair? Or why do I sleep a little bit easier at night? Is because the great thing about having that capability in your organization is they know what these tools can do, and they also know what they don't do, what they can't do. So this is back to talent and technology. It's back to having skilled operators. The smart people will know the risks of deploying technology as much as they know the benefits of it.
Where is your talent pool coming from right now, the new talent pool?
That's a great question.
Thank you.
You're welcome. We can do this all day. So where does it come from? It comes from any number of different sources. Actually, it can come from, for sure, other houses. It can come from new graduates. It can come through lateral places and hires. The question I sometimes get asked is whether we have trouble hiring tech and developers and quants. And the answer is we don't. We have thousands and thousands of applicants actually for opportunities we have. And that's great. Did we lose some people into FANG? I don't know whether you say FANG with two N's. I don't know how to emphasize the double N, but FANG. Yes, we did for a little bit, and then people came back. They came back because the use case for people joining Man Group is we have real-world issues, which are really tricky, where you get to work in an organization where you're part of solving that, where those issues continuously change. I love these charts. Where these issues continuously change, and where we need the smartest and the brightest minds to be part of that. We offer an organization that believes in open architecture, and so we give access to the greatest developers across the world in collaboration. When you look at this, when you look at our GitHub ratings, you'll find that we have the highest ratings for an asset manager, sort of double the ratings of the largest US banks. Why is that? Because we are willing to share and have an open architected solution. So we don't have a shortage of applicants, and we have people who are excited about making a real difference in the real world.
It's still competitive, though, for those applicants, and you're not just going up against finance companies, you're going up against pure play tech companies.
Correct.
A lot of things in between now.
Correct.
Yeah. So I assume, you got to, make the checks a little larger, right?
Well,
yeah.
I think with all of us, we work in this industry because there's a degree of financial reward in it. But I think we're all crazy if we think we stay in our roles, or we create firms which are only about money. We create cultures that are great. We provide people with platforms and opportunities to be the very best they can be. We invest in them. This is, everybody's sitting down, so few, but I have lawyers who are coding. Some of the biggest Python users in our organization sit in our operations and back office. It's about that. It's about skilling the entire organization up, and it's about giving some of the brightest and smartest tech developers, quants, the opportunity to be the very best they can be. That's exciting. And if you do so in a way that gives them the tool set and the freedom to collaborate, it's powerful. It's an extraordinary tool.
When we talk about this idea of recruiting more talent and obviously building that talent internally and so they can rise up here, I know it's hard to know what 20 years down the road is going to be, what technology is going to look like, what the world of finance is going to look like, but how do you prepare them for that? Because I'm sure that when you started your career, you probably didn't envision the outsized role that tech has in your job right now.
I think that's right. In some ways, predicting 20 years from now is probably a fool's errand. I mean,
you don't have any machine learning models that can do that for you?
I'm not going to rely on those machine learning models to predict 20 years from now. There's too much that's going to change. I think it's about being nimble. When you're a 2,000 strong active investment manager, we benefit from being nimble and dynamic. Actually, we make sure that we try to continue that level of flexibility. We're not that slow-moving juggernaut. And so that opportunity to be dynamic, that opportunity to take advantage of new technologies or new opportunities, that's what it's about. And you hear me say, we will go where the capital markets are, we will go where we can find alpha, we will go where we can service our clients to the best that we can do that. That's what drives us. We have a sole delivery, right? We come into work every day for one thing.
How do you maintain, though, that dynamism as you grow? I mean, you say, okay, about 2,000 employees. I know that's small relative to some other giants, but that's still pretty large. We just had your assets under management there. You're approaching, I think, close to $200 billion now, and presumably that's going to continue to grow. That's going to have some effect here on that dynamism and flexibility, does it not?
I think it's, you have to work hard at it, is the short answer. You have to be very clear that what you're not trying to do is create something that's too intransigent. It's the challenge and the check that we have within the organization. But you can grow assets and be scalable and not necessarily grow people. And I think that's one of the tools. That back to that operations piece, you can double your AUM and not increase your back office. It's about having highly skilled people that are really about focusing on alpha delivery. That's much more important. Do we grow? Yes. But I'm much more about we have to focus on culture and be dynamic in the process.
You want an audience question?
I don't know. Do I want an audience question?
I don't know who asked it, but I'm going to ask it anyway for you. A question coming from the audience is saying that some say, I don't know who some is, but some say quant investment is not working as well anymore because of interference from the Fed to keep lowering rates when in theory we are not in an extreme situation anymore. What do you think? Question mark.
That's an interesting question. I think the reality is that there isn't one quant model. I mean, that's the suggestion that somehow quant investing is a one thing. It isn't. It's multiple things, and it does multiple different things, whether it's in a tail protect environment, whether it's in a risk management, risk premium piece where you're managing macro environments, whether it's momentum on a longer 30-year look, whether it's in trend, which can be an 8-week look. So it isn't one thing. It's about the dynamic nature of it. And in equities, complete different thing again. Remember, we have both quant and a macro in that interest rate environment, but we also are looking at quant modeling within equities. And we have an entire business that's driven through that pace, along with long-short content that sits in the quant environment. So not one thing. Markets are going to have interference. We have the most extraordinary geopolitical environment at the moment. That also creates market volatility and uncertainty. So I think it's about having different content, different products that are executed through different means.
That uncertainty, though, I mean, I would assume to a certain extent that could be a benefit. I mean, you mentioned the elections. Obviously, we have two pretty critical ones coming up overseas, and of course a big one here in the U.S. I don't know if you're going to stick around for that, but I would assume that based on what you do, or at least what the folks under you do, that does create opportunity, right?
I think it creates volatility, and in any environment where you have active investment management, volatility and dispersion is where you want to lean in as an active investment manager. It's back to that point about portfolio construction. The last 10 years, let's take out last year, the last 10 years prior to that, if you were an asset holder, you made money. I mean, you might have had risk-adjusted assets, but you'd have made money. You're not in that environment anymore. The minute you have volatility and dispersion, you are going to require a portfolio that is able to navigate different market cycles. And that means you're going to have parts of your portfolio that will perform, and you will have parts of your portfolio that will not perform. And that is the nature of a hedged and a diversified content portfolio. The one thing I can tell you in every conversation with clients that I've had over the last 18 months is an appreciation for diversification, an appreciation for liquidity and duration, and an appreciation for the fact that the world is not going to be as predictable as it had been prior to that.
All right, I think that's a good place to leave it. Robin, great conversation, and really looking forward to what's next for you and Man Group. Robin Gru, the CEO of Man Group, everyone. All right, that's going to conclude our session here at the innovation stage down here in Hall 1. We want to thank our sponsor, Invesco QQQ. And of course, you can make your way upstairs here where we're actually going to take a little bit of more of a closer look here with our program. Shonali Bassick will be sitting down with Todd Boley up in Hall 2. And of course, be back here tomorrow morning, back here on the innovation stage where we're going to continue our coverage of the intersection of technology and finance and AI. Thanks, everyone. Hey, man.